Good morning, everyone, and thank you very much for joining me. This is the morning market review. It is Monday, it's the 28th of February. My name is Russell Shaw, I'm a senior market specialist at FXCM. I want to just draw your attention to my email address, rshaw@fxcm.com. If you'd like to contact me, that's the email address to use. Thank you very much for joining this morning. It is most appreciated. Just going to start off with the disclaimers, and we'll start off with the high risk investment warning. I'll keep this on screen for a few moments. Hey Raj, good morning to you and welcome. Hello Kim, and welcome to you too. Good morning, good morning, good morning. Thank you everyone for signing in this morning. All right, here's our commentaries disclaimer. And finally, our references MarketScope 2.0 and tradingview.com. All right, let's just go through to MarketScope first. And taking a look at the monthly view of the US dollar, I find this to be quite an interesting chart. There's a number of ways that we can look at this. I think they're all going to be suggesting similar conclusions. For example, let's just zoom in here. If you take a look at the two moving averages, so we've got a green 5-month moving average and we've got a orange 10-month moving average. The averages are starting to diverge. Okay, starting to diverge. And that's because there is perhaps some strength that is gathering with regards to the US dollar. And if you take a look at the RSI, it was pretty close to 50. It's now pushing away from 50. So perhaps we're getting some sort of strength in the US dollar. One way that we can look at this is, of course, with reference candles. Remember, reference candles are generally present at all swings. So if we can identify a reference candle, then we may get a swing. The problem is not all reference candles develop into swings, okay? But if we do get a reference candle, there is a platform and a probability of a swing. So the idea here is, do we have a reference candle reversal? There are 3 requirements for a reference candle reversal. I'll just show you them quickly over here, and then we'll apply that to the monthly chart. So the first requirement would be 3 candles with the middle candle having the lowest low. Okay, here we go. 3 candles. Here's the one with the lowest low. The next requirement would be price taking out the reference candle's high. We've got that. Candle to the right taking out the reference candle's high. And the third and most important, because without the third condition we don't have anything, it's got to close above the reference candles high. So we'll see that on Friday. Friday is the 1st of September. So we'll see if we do have, but you can see there's the what looks like the reference candle. Okay, so there does seem to be some bullishness that's seeping into the greenback, and that's got all sorts of repercussions for us as traders. What we must acknowledge is we are dealing with a certain amount of resistance. That must be acknowledged, and we've had this discussion here, I think, a number of times. Is the resistance level going to hold, or are we going to get a break above that resistance? Well, we're going to have to wait and see. I think that the idea here is, if we go through to our tradingview.com, it's really going to depend on the real rates. If those real rates carry on moving in that northeasterly direction, I think that we might break that resistance. We've discussed that, but the reason that there is certainly a possibility that is going to happen is we'll take a look at the real rate trend. Okay, we can put in a reference trough here. So you can put in our reference trough here. Let me try that again. Okay, we can put in a reference peak here. Once we have the references in, here's the higher trough. I'm just going to make it HT. And once we get the HT, well, if it follows with an HP, a higher peak, that's an uptrend. So real rates are trending up. We're looking at this. This is on a weekly basis, right? So there is certainly traction, one would think, to the upside. Higher real rates has all sorts of implications. First of all, it would seem to suggest to me that the dollar is going to be supported. It would also introduce some sort of headwinds in the risk markets. It would introduce headwinds to the gold market. So I'll take a look at those in a moment. But I'm going to go back to market scope. The idea here is there does seem to be just some sort of divergence happening here. There does seem to be some sort of reference candle, potential reference candle is a better way to put it, and there does seem to be some momentum build up as per the RSI. Let's go through to the weekly chart, see if we can glean anything off the weekly chart. And we've actually taken out this level here. We taken it out. So I guess the idea here is on the weekly is, well, we've got a higher peak here. So let's put in our references here on the weekly for the dollar. So let's put in our trough. Let's put in a peak. So we don't have an uptrend for US dollar yet. Okay. But what we can do is we can make a supposition. If we get a pullback and a push up, then we would get the HT followed by the HP. Okay. So then there would be some sort of dollar strength. We don't have it yet, so this is sort of hypothetical. The fact that we've taken out the previous peak here sets us up for a higher trough followed by a higher peak. Again, I think we've got to keep an eye on the real yield, and we're watching it like hawks at the moment. You can see that the RSI is above 50 here as well. Okay, let's go down to the daily chart now. So we've got a new peak here. Okay, new peak here. What's the daily chart telling us? Let's just go down one. Okay, let's take a look at the zone analysis. This is interesting. Okay, this is interesting. All right, so we're sitting in zone 1 here. That's our bullish area. Okay, between the upper blue and the upper red, you can see that as long as it stays in zone 1, there's been an upwards trajectory. You can see that the momentum has been above 50. All right, this is where it gets interesting here. Just probably tending towards overbought. So just be careful here in that we may be getting this sort of pullback to a higher trough, to a potential higher trough sooner than we think. There does seem to be an overbought condition here. That again gonna make things tricky for us, isn't it? Because we're in zone 1, one would think that we would want to catch the pullbacks. With the overbought condition, it's probably suggesting we still need to be a little bit patient at the moment. Just wanted to normalize. So a bit of a pity that we've got an overbought condition here, but we are in zone 1. We do have a higher peak there. Let's just go down to the hourly chart. And what we can do is we can keep a lookout at There's no real overlap here that I can see. But of course, in terms of our pivots, S1 is the next pivot level. If you get a golden cross of the EMAs, if you get a bullish cross of the stochastic, those are your two triggers. That would suggest that the shorter term traders are starting to align themselves, starting to synchronize up with the daily. And if we get those two crosses, the next thing to look for would be the dollar moving into the upper quintile and holding. If we get into the upper quintile and it holds, remember there's no overbought condition with stochastic. It's, again, I've seen it in textbooks. Those textbooks aren't understanding the mathematics behind the formula. It's really if it goes over 80 or under 20. If it goes over 80, nice momentum, really nice momentum. So the idea here is, do we get the cross or don't we? There's a big caveat here, okay? It's just something that we're going to have to deal with, and that is this overbought condition. This overbought condition to me is uncomfortable. The reason that we put the RSI here is specifically to measure overbought, oversold conditions, and this looks a little dangerous. Okay, it looks like it's skewing the distribution somewhat. Okay. Use the term normalize. What is normal? Well, for a bull trend, anything between 50 and 80 would be normal. 80 would be sort of tending towards overbought. For a bear trend, anything between 20 and 50 would be normal. And the reason for that, Kim, is that the RSI tends to stick to what's called the Pareto principle. The Pareto principle is sort of the 80-20 rule. 80% of the time it's between 20 and 80. 20% of the time it's above 80 and below 20. So you want to just stick with the sort of with the majority here. Does that make sense? All right, so we just want this to normalize. That's what I mean. Just normalize means move away from that overbought condition. Anywhere sort of between 50 and 80. And I'd say a sort of fair bit away from 80. All right, let's just go down to Euro US dollar. And we've got a similar issue now with Euro US dollar that we do with the dollar, in that it's fallen out of trend. It's fallen out of trend. I'll show you what I'm talking about. Let's put in our peaks and troughs here. So we'll put in a trough. I'll just use the letter T. I just put the letter P here. Okay, here's the higher trough. And here's the higher peak. And at this stage, it's looking very interesting. But then we have the yields really skyrocketing, pulling the dollar up. As the dollar gets pulled up, euro gets pulled down, and it actually takes out our trough, right? So if it takes it out, let's restart the labeling. So we would have something like this. We'd have peak, trough. Okay, and then we can only go to supposition. Supposition would suggest, well, if there's some sort of rally, it will rally towards a lower peak, towards a potential lower trough, and then we get a pull down in terms of trend. RSI is already dipping below 50. Okay, and that would be the sort of mirror image of what's going on with the dollar, wouldn't it? That would be the mirror image. If we go through to the monthly chart here, there's a lot happening here. Let's just clean this all up. You can see how the we are in bull mode. Okay, we have got the green on top of the orange, but look how it's starting to really flatten out there, starting to converge on one another. If you take a look at the RSI, it's right near 50. So there's just no real momentum at the moment. And then if you take a look at that weekly, the weekly is actually telling you, look, the trend's gone. If the trend's gone, we don't have the overbought condition here, but because it's a euro US dollar is still very much a part of this. Just be careful with this this pair as well. If we go down to the daily chart, you can see that it's in zone 3. Zone 3 is the bearish area, and the fact that we're in the bearish area, are we getting some sort of rally? We're getting some sort of rally in the downtrend. Well, for that, we need to see some sort of dead cross in terms of the EMAs, some sort of bear cross in terms of the stochastic. If we get that, then of course, just keep an eye on that lower quintile. That lower quintile can be where the market suggests a swing to us. Perhaps R1 here is the level to look for in terms of key reaction. Okay, you can see that it did pump up all the way to sort of the R1 level. This was off of the Jackson Hole speech by the Fed chair, and then it shot back down. So this R1 looks as if there is some sort of confluence of resistance there. Just be interested to take a look at gold. Let's just bring gold up. All right, so I don't like this labeling anymore. So let's just take this labeling. This is old analysis. I think that again, we've got to default to peaks and troughs here. And if we put in the reference peak over here and the reference trough over there, we get a very different analysis. And we'll get a lower peak over here, which is a sign of weakness, followed by a lower trough here, which is a downtrend. Okay, so that would be in line with the fact that there's potentially a stronger dollar here, because gold and the US dollar tend to move antithetical to one another in opposite directions. They have an inverse correlation. And you can even see that the RSI here is below 50. What would be interesting is if we get another lower peak here. Okay. And what this really hinges on is on the direction of the US dollar. And what the US dollar really hinges on is the real yield. So as long as we get this higher trough, higher peak that's unbroken, in other words, we don't get a lower trough, or we don't get a lower peak followed by a lower trough, there's going to be some support for the greenback. And as long as it's support for the greenback, well, there's going to be a headwind for the precious metal. And if there's a headwind for the precious metal, well, then any sort of rallies are going to be running into resistance. All right, I think one more before we sign off. I think let's take a look at the DAX. Let's just bring DAX up. All right, this is the weekly. Okay, it's also a very busy chart. Let's just clean it up and start from the beginning. I think the way for us to look at this is the fact that there is some downwards momentum over here. Let's just take a look at the monthly. All right, so the monthly is in bullish mode, but again, as we've seen this convergence. Okay, so definitely slowing down, and you can see the slowdown in terms of a trend line. If we had to connect these troughs together, there's a breach. There's a breach of the trend line. The breach of the trend line doesn't mean that we are changing trend. It does mean though that the uptrend's losing momentum. So the idea here is lots of momentum moving sideways. Sideways movement going to make it tough for us. I think the way to look at this is to move this down. to this. So we look at this in terms of a support. See if that support holds. And there is pressure on that support because the momentum is to the downside. If you take a look at last week's candle shows an inverse hammer. You've got bulls took price up to the high. They subsequently lose control at the high. Bears take over. And we just want to see if they push below this support area. Well, then they're taking out this trough over here. Things would be weakening up there. Just at a time when yields are moving up. Yields put pressure on risk. Yields put pressure on risk. Okay, Raj just writing up, possibly the indications are a pullback on the US dollar next before a rally. Possibly. I think the whole idea there, Raj, is we must keep an eye on the real yield. If there's any weakening of that real yield, then I think there'll be weakening in the greenback. But at the moment, we're not seeing that. We're seeing that real yields holding up pretty well. That's supporting the greenback, and that's putting pressure on all sorts of other instruments. So that's what we're seeing at the moment. All right, any other questions there? Any other questions there? All right, nothing coming through. So we'll wrap up here, guys. Thank you very much for joining this morning. I want to wish you all a very good day ahead, a good evening ahead, and we shall chat again tomorrow morning. Thanks very much, everyone.